You're a veteran ready to buy your dream home. You meet with a lender or realtor who convinces you to go with a conventional or FHA loan instead of that amazing VA home loan benefit because it's easier or sellers are more willing to accept it, promising you'll refinance later. But what they don't tell you is this decision can cost you thousands of dollars more and you're not necessarily getting a better rate down the line. I see it too often, and frankly, it's not how military members and their families should be treated. So let's break this down. So there's three main points to the video. There's going to be the actual cost of buying a property. We're going to talk about the type of refinance that you're going to do if you don't use your VA loan the first time around, and the actual cost of refinancing. Now, I'm going to go through these three examples or these 3 points with an example. Now, remember, this is for educational purposes, and these are the parameters I'm going to use. I'm just going to use a $400,000 purchase price because that's the national average, and you can kind of adjust this number to according to where you live. Now, in this scenario as well, I'm going to go through first buying a property with an FHA loan and then refinancing into a VA loan, right? The promise of this. First part, actual closing costs of buying. Now we're looking at the big numbers first because closing costs on average are about 3% on a purchase. So let's look at the $400,000 purchase price point and let's look at the parameters of an FHA loan. So with an FHA loan, you're putting 3.5% down payment, so that's $14,000. Now we'll come back to this number here shortly. You have to pay what's called an upfront mortgage insurance premium. Now this is a fee of $7,000 in our example that gets rolled into the mortgage, and it's similar to a VA funding fee, right? So unless you have a service-connected disability of 10% or more, then you don't have to pay that. Plus now you have other lender fees and third-party fees you have to pay, which like I said, on average is about 3%, but it's not even calculated into the savings that we talked about in the title itself, right? And this doesn't include private mortgage insurance, which you have to pay for with an FHA loan, and if you do the minimum down payment, you have PMI for the life of the loan. Now this leads me into number 2. Now you've purchased that property, you have an FHA loan. Now let's talk about what the VA offers as far as the type of loans that you could do. You could do a purchase transaction. You could do an interest rate reduction refinance loan. That's where you already have a VA home loan and you just want to do a rate reduction. That's a great product. A lot of people are actually refinancing out of other products into VA loans, so they actually have this option when rates drop even lower later, if they do. And the other one is going to be a cash out refinance. So if you bought a home with a non-VA home loan and you want to refinance into a VA loan, it's considered a cash out refinance. You'll need to do another appraisal. You have to requalify for the loan. Unlike an interest rate reduction refinance loan, even if you had $1 million mortgage, 10% disability rating, you can actually still refinance and get a better rate. In this scenario, in a cash out refi, everything is being redone. It's like almost rebuying a house, but you already own it, okay? You have to get an appraisal, which is not guaranteed to come back at what you bought it for, right? That's another big risk. It might come in lower. You hope it comes in higher, but you typically also have to wait 6 months, 210 days from your first mortgage payment to be even able to do this, okay? The impact of doing a cash out refinance is going to be typically higher interest rates, especially if you don't have 90% loan to value. It's a huge difference, right? You're almost not getting a better deal on that. And the VA funding fee is going to be 3.3% no matter how much equity you have in the property. So again, 50% equity, you're still being charged a 3.3% VA funding fee on a cash out refinance. Now, 3.3% on $400,000, it's $13,200. That also gets rolled into the mortgage. So now we're just talking about in these upfront mortgage insurance premium, the VA funding fee at $20,200 of real dollars in costs, not including the 3% that you paid for the original purchase of the property, plus the additional closing costs you need to associate with the refinance, right? So remember that $14,000 that we talked about for a down payment, that is by far completely gone. Let's talk about the third part, which is the actual cost of refinancing. A lot of misleading information on this. We hear this all the time. We see mailers, and the very fine print is where you find all the things that you don't want to know because you're hoping that you can get this amazing deal that they're pushing out, and they're just charging you a ton of money. A lot of times we see the word free thrown around in the for these interest rate reduction refinance loan or refinancing your home, and the reason why they say that is because they're rolling the cost into the mortgage, so you don't have to come out of pocket doing that. Couple things to remember. One, you're increasing the balance of your mortgage when you roll in the closing costs. Now, my thing when we do these is that you should take the either if you skip a month or you don't have to make a mortgage payment, you want to take that extra mortgage payment that you wouldn't have made and apply it towards your principal to reduce the principal reduction to bring it back to where it was, so you can basically start saving day one. Right now, this is providing that you can roll all the closing costs in because it depends on the appraised value. Now, this is something technical. That 3.3% VA funding fee is factored into the total loan to value of 100%. That's the max the VA goes up to, which is, again, this is more technical. You could buy 100% loan to value. So if property's $500,000, you could buy a property for $500,000. And then you could tag on the VA funding fee on top of that, right? So technically you'd be somewhat upside down. On a cash out refinance, you are absolutely capped at the 100%, including the VA funding fee. But like I mentioned earlier, if you want to have favorable rates, you really need to be at 90% loan to value with everything factored in or less. But again, the appraisal is a factor. Closing costs vary widely based on the state, the county, and the city. Some have transfer taxes on refinance, so the cost is just astronomical. That's not even included as $20,200. It's probably going more like $30,000 to $40,000 in some of these areas because you have to pay retitle fees. And sometimes you have to pay discount points to make it even favorable for you. Again, adding to all just the basic stuff I'm talking about is $20,200. It's significantly more based on wherever that you're at. The VA loan is amazing. No one should tell you to or discourage you from using it unless you're trying to buy a house that like absolutely is just not going to meet the VA's requirement. And again, remember guys, never deny yourself. Happy to help. Feel free to reach out to me. My information is in the description. You guys have an awesome day, and I'll catch you soon.